Well, Rob, it appears that we've got markets down across the board today, and it seems that some of the excitement over China's decision to allow the yuan to appreciate has petered out, as Alicia said.
Yes, definitely. I think yesterday the market was buoyed a lot by that. We saw all the commodities firms very strong around the world, and obviously on the South African market as well. But then they came back to say that they will unpeg it, but they'll still watch it slowly and they will intervene slightly. They won't just let it run away. So it's going to be a gradual appreciation, and because of that, I think people took profit quite quickly.
Of course, as you mentioned, commodity shares doing very well yesterday. We had Kumba up by over 4%, and it hasn't really lost any of those gains today. It's still up marginally. So it looks like commodity players are still hoping that there will be increasing demand from China as that yuan appreciates.
Definitely. I think on the iron ore side, Kumba stayed relatively firm, but I think some of the general miners took a little bit of strain. We see Billiton as well as Anglo come down quite aggressively today. But on the iron ore side, yes, they do think that there will be still a very strong buying coming from China.
Of course, we ended about 1% higher yesterday, and that's really capped a week or two of reasonable gains for the JSE, thinking of where we came from a month ago after we saw that 15% fall on the market. So do you think it's a case of a little bit of profit taking at this stage, Rob?
Yes, we are trading in quite a wide range in the market, and as we come up to about the 25,400 level, there's a lot of resistance, and we see some selling coming into the market at those levels, and the range can come all the way back down to 23,800 and then down to 23,000. So while the markets slowly recover, we're trading in quite a wide band, and as soon as we get to the higher levels of that band, you see the selling come in quite aggressively and push that down. So I think we're in the consolidation phase in this market, and we might be like this for the next few months.
Of course, it really was the Asian markets yesterday that benefited the most from that news coming out of China. In fact, the Chinese stock market up 2.9% in yesterday's session, but overall for this year it's still looking pretty bleak for the Chinese market, isn't it?
Yes, they're down 21% for the year, and they are still in a bear trend, and they haven't recovered like some of the other markets around the world. And this shows you that even though they're growing aggressively, locally they are obviously still worried about the amount of money being lent, and is there a bubble occurring in that Chinese market? And because of that, those stocks haven't really moved as well as everywhere else in the world. So that Chinese market is still in a bear trend. It needs to get beyond 22,650. If it breaks beyond there, I think that'll show the real recovery in the Chinese market and a push across the board around the rest of the world. But it's got quite a way to go to get through 2,650 on that Chinese exchange.
Well, perhaps staying with China, but bringing a local element into that, we have Naspers down by over 5% this morning. And of course, Naspers does own a large stake in Tencent, Chinese internet company. Is this related? Why are we seeing such a heavy fall in Naspers today?
I think it's from regulatory purposes. I think in China they have now stopped the use of virtual money to miners in the internet gaming world. In China there's a very big internet gaming culture, and in that culture they're allowed to use virtual money. And now they have banned virtual money for miners. How they'll actually police that, whether you know that there's a miner on screen or not, is quite difficult. And I think you saw Naspers was down at about 262, now it's recovering all the way back to 267. So it's 5 rand off its lows. I think it was slightly oversold. We'll need to take a look what the analysts see and is how that will impact Tencent's earnings. And Naspers does hold 35% of Tencent in China, so it could affect their earnings, but I don't think that aggressively as the move shows today.
Of course, Naspers was a share that was trading in the 300 Rand level not too long ago. So in the 260s, do you think this could represent a buying opportunity perhaps for investors?
We'll take a deeper look into how that's going to affect Tencent, but I do think it could be a buying opportunity. It shows you again that it's very difficult to invest long term, but the market does allow you to have a lot of opportunity to trade. So 260 to 300 Rand is a big range in Naspers, a lot of money to be made in that on the short side or long side. So there's a lot of trading opportunity in this market, but very difficult to invest long term.
Because we had results out yesterday from Remgro, dividend up about 10.7%. And this, of course, is a company that unbundled a stake in British American Tobacco last year. It's now talking about unbundling its share in diamond company Transhex. Your view on Remgro's numbers and the decision to unbundle Transhex?
I think very good. Transhex is a non-core asset for them. I think it's about 100 odd million rand transaction for them. It shows that they're happy to get rid of non-core assets. I think that's good for shareholders, and I think that the money they're getting in from Transect has gone into the dividend, which is positive for shareholders. They've done relatively well. I think headline earnings per share were up 87%. That coming from a very big move in Mediclinic that moved up 60%. So looking overall very good. Nedbank's got a target price of 98 Rand. They're trading at 98 Rand, so they are fully priced. But going forward, they do have in 2011 a lot of growth prospects, including that merger that they did last year with Venfin, which should show improved earnings per share coming forward into 2011. So looking very solid, but fully priced at the moment.
Well, just looking forward to the rest of the weekend. There's not much on the corporate front. We do have quite a lot on the economic front, though. We've got consumer inflation numbers tomorrow, producer inflation numbers on Thursday, and of course we also have the Reserve Bank's quarterly bulletin, which is going to tell us what the current account's looking like at this stage. What are you going to be looking for in all of this, Rob?
I think the unemployment numbers, if we saw some of the numbers that came out today, we're still not creating enough jobs, and I think that if the CPI and PPI numbers come in and the inflation shows that it's very low, it might lead the Reserve Bank to allow another interest rate cut. So I think if that CPI number and inflation shows that it's very, very low, and there's no real a problem going forward in inflation, that maybe we can get one more cut in the interest rate. It'll slightly weaken the rand as well if we can, and that's what we're looking for. So very low CPI levels and inflation levels.
Rob, we have to leave it there. Thanks very much for your time today.
Thanks very much, Stephen.